payments. What will our business be in 10 years? That's it. Get the right topic up there. So we notice we have people up here with probably a little bit more hair than me in general case, so we must be know where we're going in the future. So if I could have your company name, your name, and maybe just a brief piece about what your company does, that would be really great.
Sure, thanks. I'm Simon Black. I'm the CEO of PPRO. PPRO aggregates more than 100 different local payment methods for e-commerce around the world onto a single platform, and we make all of that available through one API to PSPs and merchants around the world, enabling cross-border e-commerce.
I'm Ron Kalifa. I'm chairman of Network International. Network International is the sort of leading digital payments provider across UAE and Africa, servicing the key markets in terms of we're headquartered in Dubai. We're on the merchant side and we're on the issuer side in terms of servicing both sides of the equation. If you just think about that region, it's not a region that everyone kind of is that familiar with. It's got a population of about 1.5 billion people, and 86% of all transactions there are in terms of cash. So it's a huge opportunity for a business which is listed about a year ago and is doing pretty well.
Hi, I'm Nicolas. At Ingenico, we are really focused on making things easier for our clients all around the world. Just for your info, we cover 170 countries, and we have two main areas of focus. The first one is POS devices. We have an install base of 30 million POS devices around the globe, literally. And of course, the half of the business also comes from merchant services. And there we focus mostly on any kind of merchants, whether it's pure online players, the big tier one retailers, up to the smallest SMBs.
Thank you very much, gents. I'm going to start off with picking up a topic we sort of touched upon with MasterCard just now, which was that bit about the QR side, but also maybe more broadly. If we look globally, we're seeing in many developed markets the use of NFC, and yet in the many of the developing markets, QR codes. The session's all around 10 years' time, so I've got to ask, is QR going to win? Is NFC going to win? Are they delivering different solutions? Are they compatible? I'm just interested in how you see them, because they both seem to be going against the war against cash, attacking that, but they seem to be very different. One's much more technology-based, but I'm interested in your views on that, on QR versus NFC, in alternative payments and everything else.
Want to go ahead, Ron? Okay. I think if I had to phrase it the way we look at it internally, I'm not certain that I would oppose QR to other type of payments, i.e. cards, etc. I think the way we would look at it would be EMV versus non-EMV. And of course, the second aspect that really strikes me is the maturity level. So obviously, where you have the right infrastructure and a certain level of maturity, what you see that you have very established payment means, as your previous speaker was referring to several times, and as I did in some part of my life where I used to work for Visa. And there, what we see that it doesn't take over that easily, and it's hard to replace things that are frictionless and pretty convenient from a consumer perspective. In other countries, and that's why I was asking if you wanted to tackle it first, Ron, where you see that new forms of payments might take off and sometimes win pretty easily, as it happens in some part of Asia or in Africa, etc.
I mean, Ron, you have both in your region, very much so, QR and NFC. You know, Dubai and the UAE, I know that both the schemes are very heavily pushing NFC, and yet as soon as you move into your East African markets, it's, you know, finding an NFC terminal is a bit like finding a lump of gold. You know, it's fairly hard. It's all QR. I mean, you have a real, you're seeing both.
Yeah, look, I don't think we think about it in terms of one's a winner, the other's a loser. I think at the end of the day, payments is basically just growing rapidly. And when you start thinking about QR codes, they're easier to adopt from a user experience point of view, from a merchant point of view, simply because it can be read easily. There are security issues around them, as you know, whereas NFC needs a phone that's NFC enabled. So some of the markets you're talking about, Dave, they don't have those facilities as yet in terms of smartphones available. So I think that the real issue in our head is around the fact that how do these type of payments grow? What is it that is going to happen to try and drive inclusion, to try and drive financial inclusion for some of these markets? We're operating across a spectrum of markets which are very, very different, from mature markets, whether it's developed markets, through to developing markets. And I don't think we need to, frankly, back a horse in terms of it's one versus the other. I think what we've got to do as providers is to make sure that we make these things enabled for whoever the right constituents are in the markets.
So the panel topic was where we'll be in 10 years. So just to pull you back to that, if I was to ask you, sit here in 10 years' time, Ron, are you going to tell me that you will still have QR going on as well as NFC, or do you see that the markets will have matured to the point that the QR will have disappeared, NFC? I'm just interested in, because you said you see it as where it's not developed, but do you think it will, or would you think once it gets ensconced, it will stay as QR and NFC won't really establish?
Yeah, look, I think every prediction that's been made about payments over the last 10, 15 years has been wrong. So I'm not sure I'm clever enough to kind of express a particular view. The thought process is exactly as you say, which is that NFC is going to be the dominant activity. As technology emerges, as much more NFC-enabled phones are there. However,
security
and security is a big driver of that. As Nicholas said, I think that's going to be a big issue. The challenge is that I think there's another wave of technology that's about to hit us, which would be in the form of some level of biometric, particularly some of those emerging markets. And I'm not sure what that looks like in 10 years' time. But if you were to just draw a linear graph from where you are today, you would theoretically say it's going to be NFC that will be the winner.
I agree with Ron. Yeah, no, I think the reason you're asking the question is because of the very local nature of payments and the way payments has evolved.
Yeah.
And what I see over the next 10 years is that will still be the driving factor. There'll be more complexity. But ultimately, standardization is better for everyone, and that will be driven through the technological advances, but also meeting needs, and the biggest in the long term is security. Okay,
so I'm going to ask you a question directly now. You started off this session by talking about how PPRO is integrated all of these emerging payment solutions, and certainly that's where, you even wholesale it out to many of the other acquirers out there. So I've got to ask you the question then, which is, as we look forward again, and I'm going to ask you to look forward, what's going to be the future alternative payment? Because to me, a lot of what we used to regard as alternative is almost becoming mainstream. PayPal at one point was alternative. Many would say that's now mainstream. Amazon Pay, mainstream. What is the future alternative payment then, if all the alternatives are becoming mainstream?
Well, alternatives as they were emerged to fill a need, and now we talk about local payment methods rather than alternatives. People still, like in your question, talk about emerging markets, for instance, emerging payment methods. The best antidote to that way of thinking is Ideal in the Netherlands, which is now almost accounts for 60% of e-commerce transactions. So it's the main payment method for e-commerce in the Netherlands, people effectively paying direct from their bank account. In terms of 10 years in the future, like one says, we can all predict, and we'll probably all get it wrong. So I thought I'd look 10 years ago. Actually, 2009 turns out to have been a big year in payments. It was when the first PSD, Payment Services Directive, was launched in Europe. Stripe was founded in 2009, not really an innovator, but a very good fast follower. But also Bitcoin was launched. And I think the first half of this decade was hype about Bitcoin. The second half was hype about blockchain, neither of which have changed payments so far. So in terms of new different forms of payment, for sure there will be many. Against Bitcoin, the big successes of the last decade, in 2010, for instance, WeChat didn't exist, let alone WeChat Pay. More recently, PayPay in record time has gone to, I think, 100 million users. So there are gaps which will continue to emerge either in customer needs or new opportunities through changing technology. So for now, I think the most important thing to keep in mind is when we speak about payments generally, is just how different a starting point are in various markets around the world. And that's not simply emerging versus developed. It's even within developed markets, the striking differences.
Now, Ron, without causing any offence, you've been around the acquiring business a couple of years and obviously seen changes. I'm interested in your view on alternative. Where are we going on this? What is alternative? Because I get very concerned by people talking about this term alternative payments, because to me, to your point, we just seem to have different local versions. We don't actually have alternative payments anymore. But I'm interested in your view, because you've been around a couple of years in the payments business.
Just one or two. The reality is that I agree with you. I don't think there is a thing such as alternative. These are the default payment methods for different local schemes. They're typically the local debit schemes that have emerged in different geographies and different markets. So just to sort of put some flesh on it, if you think about Alipay is the default method. It's not an alternative payment in China. If you want to pay, MasterCard, Visa is less prominent there than Alipay, for example.
So MasterCard Visa is the alternative payment?
It is in that market by definition, right? So I think we need to start thinking about it in terms of different geographies and different domestic activities. The emergence in recent years, very recent years, in terms of Klarna, Afterpay, Pay Later, those are some really interesting techniques that are coming through, I think. And I think we're going to start seeing many more of those coming through in developed and developing markets, simply because it's giving a choice to the consumer in terms of how they want to pay. If you're operating in Brazil, you've got to take Boleto. There's no point in just taking the normal schemes. If you're operating in Russia, you've got to take Kiwi. So I think these are the methods that are going to become the prominent ones. And as data localization rules start to come to the fore, and they are coming to the fore, if you look at India, you've got to basically have an onshore processing capability in order to process a transaction. I think nationalism, for want of with a small n, is going to sort of start to become much more prominent. And as a consequence of that, I think we're going to start seeing schemes which are becoming much more local as opposed to global.
Almost what I pick up from that is local data control. Is that a fair, or local data requirements?
Local data control. I mean, we want to call it requirements, but it's actually local data control that's happening, where people don't want transactions to be processed offshore. They want the data to be kept locally. It's incredibly challenging for providers because you've got to be on soil to do that, and it's expensive. It's frankly cumbersome. It's replicating infrastructures that have already been built, where people have spent millions on. So I think it's going to be quite a constraint and a challenge going forward.
And a cost issue. I mean, what are you seeing as you
I don't think I will change the angle rather than adding anything, because you both have covered my perspective, which is overall at Ingenico we facilitate more than 300 payment methods, and what we see is that more and more governments are really focusing a lot of attention on that, and therefore local is becoming really the big thing. The second comment is that deploying anything in payment takes quite a lot of time. Therefore, it's hard to predict where we will be 10 years from now, but we know more or less what is going to win 5 years from now, because any single deployment between the time you decide to create it, the time you pilot it, test it, deploy it, etc., you know that it will take 5 years.
Well, that leads me to ask you then, what will be winning in 5 years? Because if you're telling me you're sitting there with the technology side, what are you seeing is going to be for the next 5 years?
Yeah, I think the debate is around what we were discussing at the beginning, which is NFC, non-NFC, EMV, non-EMV. Personally, we're looking a lot at cryptocurrencies. And of course, account-to-account payments, as you've been saying, is something that is taking over pretty nicely.
So that sort of nicely leads me on to, I think you mentioned that in 2009, PSD1 came out. We're now here in 2020. PSD2 should be live, but sort of is just about, shall we say, in the starting blocks, keeps on having a couple of full starts, but by March 14th really should be fully going out there on the open banking. Potentially, as well, people are all talking about open finance even coming down the road. And I just wondered, what effect and expectations do you think this whole forced openness is going to have? Because we're seeing it become really a global phenomenon very, very quickly. I mean, if you go back 3 or 4 years ago, it was hardly talked about, and now we must have 30, 40 markets around the world talking about open banking, open finance. Different flavors of vanilla in many countries, admittedly, but the principles of open access. How do you think this might affect payments? Because change it or not at all?
I think it enables more value add to be created for the consumer, for the merchant, and then as a result of that, in turn, for the financial institution through better data. So I think it's going to be a slow evolution, but will be very significant. So simply by enabling better integration of the payment with accounts, richer data about the consumer. Data's a double-edged sword for consumers. Obviously, there's fears about privacy, how that data may be exploited, but huge value can be created for the consumer if it's done correctly.
Yeah, I will concur on that. So clearly, it's moving, but it's moving slowly. And the key factor is...
Do you think it will increase in speed?
Say that again?
Do you think the speed of change is going to increase or just continue at a very slow level?
We saw that it accelerated quite a lot. But if you compare it in terms of... let's split it between banked and unbanked population.
Yeah.
If you compare it in percentage of the banked population over the world, it's still very, very small. And as I said earlier, these things take years to be established and win. What is key to me, I think, when you travel a lot, you see always the same criteria, and you've mentioned some of them. So clearly, trust, confidence, consumer data are key factors. You were discussing with Michael friction. It was interesting to see that you mentioned that if you're too frictionless, then it might become an issue for a client on the payment perspective. So would be happy to see what it means on the banking side. The part that we never mention, and which I think is a lever that some open bankers could use more, is the merchants. So we always tend to go direct to client when it comes to open banking. And what we see in our ecosystem is that partnering with the merchants is a great way to access consumers. So that might be also a way to deal with that in the future.
Yeah, let me just add to the point. I think, Davey, your question, I think, is really quite... there's a word you used, which I think is essentially the key one, which is open banking. Everyone's talking about it, but actually there's very little real traction at the moment. In the UK, there's something like £1.7 billion has been spent on open banking by the different organizations, banks, to get themselves ready. But actually, there's probably 7 consumers using it. I mean, it's next to nothing in terms of using the bank rails. So I think there's an awful lot that needs to be done to get it. And the key driver, I think, will actually be consumer behavior. Because consumer behavior will drive this. It's not going to be about making it available. MasterCard, as you heard from Michael earlier, bought VocaLink in order to access the bank rails as opposed to the card rails and make it enabled in the UK. But there aren't that many propositions where people are going into a retail store using a bank payment method and using the bank rails versus the card rails. Now, there's some issues there simply because the level of recourse that you can have on a bank transaction, bank rail transaction, isn't the same as a credit or debit card. You can't do a chargeback, for example. So there's quite a lot of behavioral changes that need to happen from a consumer point of view. The intention of PSD2 was really quite simple. It was to increase innovation, it was to increase competition, and it was to increase access. In other words, bringing new players in and bringing these new actors in terms of account information providers and payment initiation. I think it's going to take a while. I'm not talking about 10 years, but I'm talking about over the next 3 to 5 years before we start to see a real change in terms of open banking happening. I
think the point you made there is quite interesting, because if you go back to your point about Holland and Ideal, it's interesting, whilst roughly 60-70% of sales online are done with Ideal, only 45% of airline tickets are, I read, which shows consumers have got a real understanding of this risk factor Do you see that in all your data coming through? How consumers choose payment methods based on the type of merchants and the risks and stuff?
Yeah, again, I think that there's variances by market, but for sure, consumers are getting more accustomed to managing their spend in a multi-factor way. When I say multi-factor, different accounts. And I think that will be a growing trend. I think there's a disaggregation of the traditional core bank account will happen in more and more markets, which is linked to that.
Okay. I just find this whole PSD2 thing quite interesting because, as you said, we've seen sort of a hesitancy start to it, although we are getting more TPPs registered and the data, though. I'm just wondering where this leads us to in terms of the proliferation of data and everything else, because we talked about the trust issues with Michael just now, and I'm just wondering, where we're going to be in 10 years with this trust issue of data and holding it and going through the retailer. Because the other side of that is, of course, if I walk into a retailer in a couple of years, using open banking, he can do a credit score me on 15 seconds and give that point of sale credit using my data. Now that surely is a great opportunity for you guys to empower that type of transaction in Ingenico through the till and all those type of stuff.
So I think the data is a non-negotiable. So clearly it has taken an amazing importance into our lives. And we see that that's the trend. It's going to be more and more important as time goes by. And once again, as you were saying, the key there is for the consumer to accept and trust what will be done with their data. But nevertheless, what we are clearly seeing is that as time goes by, we will have to be more focused on data. What comes with this non-negotiable is, of course, a standard. So you were discussing it also with the speaker before. What are the standards that are acceptable from a company, government, and consumer perspective when it comes to your data? Do you want these to be staying in the same countries with the issues that it's, as we were saying before, creating? Would you accept that your data would be traveling with you? When it comes to biometrics, being identified is easy. Would you be identified in 100+ countries? And would you accept that? Will you be comfortable for anything that is linked to your person being known by regulators or governments that you don't trust? So I think the way we look at it at Ingenico, to summarize here, is that's a key part of our activity. That's a non-negotiable, but at the same time, it does create, when you look at it in perspective, quite a lot of very interesting changes.
Let me just pick up. I think the thing that I think is going to be a challenge is fintechs typically want to work with larger players who've got access to information, customers, and distribution. The large players typically don't want to work with the other guys simply because they're worried about them eating their lunch. So I think that tension is existing at the moment, and open banking, let's call it that, is a catalyst as a facilitator to try and find ways to create collaborative models which haven't existed in the past, which will allow, in simple terms, account aggregation to happen in a way that we haven't seen in the past, where boundaries are more clearly defined between a large bank and a smaller player. And I think once that starts to get established and people are more comfortable, because banks can't cope with the pace of change that's needed by consumers. People are walking around, we're all walking around with apps on our phones, and we want to have access immediately, and frankly get fairly annoyed when we can't get information quickly. So banks have got to start to look at it from that point of view. However, fintechs have got to also make sure that they are helping to protect the legacy that the banks have got in terms of distribution, so that they don't encroach on that. So I think there will be some tensions that have yet to be cracked in order to resolve it.
Have a comment, or I've got a follow-up to that. It was interesting you talked about this tension between fintechs and the incumbents, Ron, because I sit on a lot of Dragons panels, and I have a lot of people presenting me ideas. And sometimes I'm worried that a lot of what we're seeing coming out these days is techies creating things because they like playing with tech, rather than necessarily delivering a better customer experience. And I'm slightly concerned sometimes is technologies for technology's sake, rather than actually the customer being at the center. At heart, I'm an ex-ad man, I'm ex-Saatchi and Saatchi. It's, does the customer want it? Will they need it? Will they use it? What's the proposition? And some of the tech I see coming out, I'm not sure actually has that answer to it. And I just wonder how you see that.
Yeah, I don't see you wearing a contactless ring. That was one of my favorites of the last decade.
Funny enough, I have one, but I could never get it to work on the London Underground, so I gave up. I had my BPay banned for years until BPay decided to swap onto Pingit and then tell me, and if anyone from Barclays is here, they know the story, Barclays have decided that despite the fact I have a current account with Barclays, my particular current account doesn't work with their Pingit. Yes, don't get me started. So I've actually had to go to using my Samsung Pay phone now. So, but of course I couldn't do that until I had my Curve card accepted on it because my bank doesn't work with Samsung Pay. So yes, this is why I get sometimes worried that no one's thinking through the technology implications of the actual customer to align these things.
I'll take it first if you allow me, because when I was at Visa, we had to deal with all of this. So I think there are very interesting aspects of your questions and your comments. The first one is tech-driven innovation versus consumer-driven innovation. And I think that's part of the answer is in the way I looked at it, and we looked at it today, is I don't really care where innovation is coming from, because I know that there are some principles that have to be achieved for it to be successful. So clearly, consumer adoption, frictionless, easiness, ecosystem play, because in payment it's one of the key aspects, is very important. The second comment, and you explained it very well, is that I guess that in terms of innovation, standards would be more than welcome. And I remember having had the discussion around tokenization, for instance, which is how many type of wallets do you want, how long does it take to go from an innovation to another, what's the disruption from a client and consumer perspective. And that's a key answer that we together needs to stop being so passionate about developing our own innovation and make sure that we produce or manufacture something that would make sense from an end consumer perspective. And the last aspect, but we covered it all earlier, so I won't spend a lot of time on that, is it takes years to build something. We were part of the contactless London transport experience. And within the moment where contactless was created, then piloted, I think if I remember, we did that in the Olympic Games in London 2012. And then it became mainstream. It took almost 10 years. So if it took 10 years for contactless, it is normal to accept that other innovation would also take some time to reach a certain level of adoption.
But how much of it is for techies for tech's sake, and how much is it really for the consumer?
But if you're thinking of the actual technology, most of the innovations we use every day started out as techie for tech's sake. People fiddling around in the Xerox labs, with this crazy pointing device, right, which became a mouse, or ARPANET for the internet. And actually, I like to think of myself as being progressive, but I thought contactless was a ridiculous idea. When I stand in a store and putting in 4 digits and hitting enter takes me about 2 seconds. Why do we need contactless?
But you don't have a contactless ring on.
I don't have a contactless ring, but in London, all I need is my phone. Wherever I go, including the underground. So it's. That said, I think one of the best examples, again, is cryptocurrency and blockchain, and I'm sure that sooner or later it will have a massively valuable application. So it's just finding that right alignment of the timing, as was with contactless customer need, and maybe infrastructure, and that infrastructure or the environment that really enables rapid adoption could be anything from 5G to legislation, so it's very hard to predict.
You know, there is this anecdote, if you allow me, to make you smile, that I always tell my friends about contactless. So I used to run Visa Europe, and when I joined Visa, we decided, Ron was one of our board directors, that we would go for contactless big time. So it's year one, I'm now on this roadshow, and I go everywhere in Europe and try to explain why contactless, that was already existing somehow in the UK and some Eastern countries, would be fantastic. My toughest press conference was here in Paris, a few streets away from here, where it took like almost an hour, and every journalist was explaining to me why contactless wouldn't work. Security reasons, client adoptions, consumer adoptions, etc. And I was so shocked. And now we fast forward, we're 6 years literally after that, and I was going to buy my bread on Sunday. I got into this boulangerie and asked for a traditional French baguette, sorry for that. And the lady went, well, you can't pay with your card because we only accept contactless above €3 or whatever it was. And I was once again so shocked because it was the first time in months, and literally I never have €1 on me. It was the first time in months that someone wouldn't accept contactless. So, I mean, you know, as you were saying before, Ron, we, in predictions, we're all pretty bad, actually.
All right. We're slowly coming towards the end of this session, and I really want to say that if we take payments to the extreme and look around what some commentators are saying around digital identity and form factors, I'm quite interested in getting your views here, because there is a view that effectively, you know, if we go back to what we're saying here, what will our business be in 10 years, the form factor of payment will be us. It will be biometric in yourself. And I'm interested in your views on where you think we'll be in 10 years. As you said, all the predictions we've all made have all been wrong. So therefore, I will ask you to make your predictions on the basis that we may be well retired by then and living a nice life, not have to be actually reminded of them. But will the form factor of payments be you? Will we still be using some form of tokens? Where are things going? Let's really look ahead in your views.
Let me kick off. I mean, I think the reality is that I think it will be us, and us is defined by biometric in the way we talk about it today. And I think the consequence of that is that payments will become invisible. In the previous session, you were talking a little bit about the Uber experience. I mean, that's now avidly talked about as an invisible payment method. The reality is that there's still something behind in terms of the rails that's driving it. But I think it will be essentially driven by us. You know, forget wearable technology. I mean, I think that's a bit of a fashion accessory at the moment in terms of where that is. Sure, you can talk about it in terms of mobile phones and watches and things, but the reality is that the authentication part of a payment, which is essentially what we're talking about, can be done through existing technologies, biometrics, iris, etc. I think where it will start to emerge is as we start to see a convergence between the existing payment rails and, let's call it, a digital central bank currency, which I think could be in the form of some level of blockchain or digital distributed ledger. I think as those two start to come together, which is some years away, but as they start to come together, then I think it starts to create a different authentication process where there's a validation between one party and another without the need for going through the process we've got at the moment. So I think that's where we'll start to see some things. Smart contracts are the way that we're talking about it today, and some of those will emerge as well. So you start to have multiple aspects of a transaction hooked together as opposed to individual transactions in the way that we've got it now.
Yeah, I don't disagree with that. I think specifically in terms of timing, in 10 years, what the big change you'll see around the world is a leveling up. So today, there's huge differences from market to market, with people paying cash or in check in the US through to smartphone via QR code, etc. And still, don't forget plastic, which is huge. So there'll be a leveling up, and I think 10 years from now, it's really about the smartphone. And in certain applications where people will be more advanced, sure, you can just get out of the cab or there'll be facial recognition or whatever, but I can't imagine that any of us or anyone else will go out and about without a smartphone in their hand 10 years from now. 20 years is another story.
Okay.
Yeah, just on the biometrics angle, as you were saying, it's a reality today. So some of our devices are, the consumer can identify through biometrics. So in India, for instance, if you want to pay with a POS Ingenico terminal, you could put your fingerprint on it, it would work. We're market leaders in China also on the POS side, and you would identify yourself through face recognition. Having said that, as we were saying, there is a huge difference between identifying yourself through biometrics and or paying without any support. And I won't develop it, but I mentioned it earlier. It circles back to the trust that you have in the authorities and or the merchant to keep some of your biometrics data. And I'm not sure that I want to be identified everywhere I go, whatever I have. It is already a constraint that I have to live with today with my phone, but I'm not sure that I would want my face, my body, my DNA to be recognized in countries that I do not trust and by government that I do not like. So here you have an ethics component that I think would make it a little slightly more complex for us.
And with that, I have to say thank you very much for 3 excellent panelists who've given us some really insightful comments. Thank you very much.